I will say another company I reported is BlackRock. 10 straight quarters of inflows. Reported $5 billion in sales for the quarter. What do you think their assets under management is now? Do you have an idea?
I would guess 10 because I feel like I saw 8 to 9, so it's got to be higher than that.
They have 9.4 trillion. I think it's more like 10 trillion.
Oh, they don't even have 10, huh?
I'm pretty sure it's 10 trillion. If you look it up, it'll say 9.4, 9.5, but I think it's over 10. And I think that when Larry Fink came on, he made it a purpose of not to mention that number when you're hitting $10 trillion. I mean, not only is that higher than GDP of like 60 countries, but I don't know why I don't know if it's just showing how big they are or whatever. Usually he always says this asset.
Exactly. He used to be a cheerleader about it. Now he's not. You know why.
And then when you get too big, you're like, well, no. You can't mention it anymore. But 9.4 trillion in assets under management. Again, it's not you're listening to this and Larry Fink. I'll get to his comments. He had some great comments on CBC. Squawk Box was fantastic today, by the way. Those guys interviewed so many guys from Starwood as well. They did a great job this morning. Had these guys on for a long time, which is what you like to see when you're interested in brilliant people. You want to hear more from them, and a lot of times they get cut off in a minute or 2 minute segment. These guys were on for like 15 minutes each. It was great. But one of the things BlackRock said, which I mean, a great piece of investing here, where you can invest in these companies, is ESG. He said huge demand for ESG. So that's ETFs, it's more company. Everybody's getting into this. We talked about it. So we talked about carbon credits is a great way. We talked about a couple names. Start looking at ESG companies. You're seeing Plug Power come back a little bit. Some of these things are wildly expensive, but money has to be pushed into these names no matter what. That's what they're creating. These ETFs are going to go crazy on them. Companies have to invest. They have to tap everyone on the shoulder and let them know that they're investing in it and saying, here, see, we are investing in this. And they make announcements that they're investing in it. They have to make a big deal out of it, and tons and tons of money is going to flow into this. And I still think there's great opportunities in this space as every company is forced to spend tons of money, billions, and it'll be trillions in 10 years. Combine a lot of this going to ESG, which is pretty crazy. I thought that was one of the biggest takeaways. We're listening to BlackRock.
I didn't see the interview. I'll have to go find it. I saw some bullet points from him. Larry Fink is a good character in my opinion. I think he's a giant hypocrite, and I can't really. That's the nicest thing I can say about him. The reason he doesn't brag about the assets under management now are because through him and the other elites that look down their nose at everybody else and the common person is because that now people are getting pissed off about it. And you can only push people so far until you say, hey, these are our rules and these are your rules. And now trillionaires and trillion under management isn't popular. It's kind of hey, what happened to this? Help out everybody else. One of his comments is funny about inflationary pricing and energy will be with us for a long time. Yeah, no kidding. And he says, we're working with oil and gas firms. Now, remember, this is the same guy that is throwing their political weight because they're huge and they own basically everything through their funds and things. And they have tremendous influence. And these are the guys that voted for engine number one to help get on ExxonMobil's board and change them. So when they're working with them, that's just good code language for we're forcing them and we're telling them what to do for political correctness. That's why inflationary prices and energy are going to be with us for a long time. It is good to pay attention to this guy. They are a huge player and they can move markets, but just remember, he is not looking out for you. We are, Frank. We're looking out for everybody, but he is not. So that's the nicest thing I can say, Frank.
I know, right?
That guy pisses me off.
Tell me how you really feel. Yeah,
exactly.
I will say this, and some of these guys I have my personal feelings about, but I even if I don't like someone, there's a lot of brilliant people out there. Listen to them.
Oh, absolutely. Yeah.
I know you do. I do. A lot of people, but not a lot of people do. They just like, oh, I hate that guy. He doesn't know what he's talking about. I'm like, some people are brilliant in some areas, and they could be pretty much, an asshole in person, but you want to learn from him. That's the goal. Learn as much as you can. It's all about information. The more information you have, the better decisions you're going to make investing, and you want to have access to that as quick as possible, not inside information, just knowing what's going on, and you can identify trends a lot quicker than everybody else, which we've done a lot through my years. Larry Fink, getting back to it, says inflation is definitely not transitory. Sounds familiar. He says still bullish in the long run, expects higher highs in the equity market, but there will be a transition period in the markets as costs of companies increase. He said companies will likely pass on those extra costs to consumers, but it sounds like he's worried in the short term. I hate people who say that, actually, who say, long term, we're going to be fine. Short term, we could crash. What does that mean? What does that mean? I mean, come on, you could get a 5-year-old to say that. I mean, is it, when? Timing. So if the market crashes, you're going to take credit for it. If it doesn't and goes higher and higher and higher, you're going to be like, hey, I told you it was going higher. I mean, come on. You're already rich. 10 trillion assets under management. Doesn't matter if you're wrong anymore, right? I mean, just go out there and make a prediction. Be bold. I don't know. Anyway, one thing he did say, rising inflation or raising inflation from energy will be with us for a long time. The U.S. cannot restrict supply without changing the demand curve or without finding alternative sources of energy. Translation, you're reducing supply. When do you reduce supply? When you see demand slow. We're reducing supply when we're not seeing demand slow. Demand is staying constant. Maybe it's going to go higher and higher. More people are going to be out driving, more planes, whatever. That results automatically in much, much higher prices. So why everybody wants to say, hey, alternative energy and the environment is clean. We don't have enough alternative energies to make up for taking that much supply off the market, which is why you're seeing prices skyrocket here. So how is that going to stop? I don't know. How do oil prices don't go to 100? I'm not too sure. Do you know? I mean, I don't know. Maybe it's me.
Well, no, I don't know where they're going exactly, but the thing there with, I would guess higher than lower. His point there on the demand side, Frank, how do you change demand? You stop doing something. Like how do you change demand without telling people, hey, don't keep your AC low, or don't heat your house, or don't travel? I mean, think about what it means to change demand and find alternative sources, which, to your point on the fab plants and semiconductors, you don't just switch over from coal and oil and gas to clean energy right away. You don't build a nuclear power plant overnight. You don't build a solar panel or install a solar panel overnight. I mean, you can do it quickly, but that's just not the reality. So what he's saying in a very nice way, again, for all us peons out there, is you're going to have higher energy prices for a long time, and you need to deal with it. And you know what? Because they're going to tell you it's okay, you ought to be happy with it. That's the actual tone from these influencers in the market, and it's ridiculous.
And the cure for demand so down is pricing, right? As prices go higher. But I could tell you, in Florida, it's about $3.10 for gas. In other places, I know in California it's much higher. I think it's $3.50 or $3.40 in New York right now. Which is very, very high, very, very high. But it's not to the point where people aren't driving yet. If you go to 4, if you go to 5, people are going to be like, oh, all right, I'm not driving. Right. That's when you see demand come down. But it's not at this level right now. People are not choosing not to go out or not to drive or not to do things, to travel. And that's just with your car. I mean, you're going to be taking flights. You're going to have to travel. You're going to have to do different things. You have to heat your home, turn the air conditioner. So higher prices is going to hurt, but they're probably going to go higher since we're taking a lot of this stuff offline, even though we're the number one energy producer in the world. We were, which is something unheard of. No one in the world thought we would ever achieve that. That wasn't even on a table 10, 12 years ago. And now we're basically, which keeps us out of a ton of wars, which makes us absolutely powerful when you have your own raw materials and stuff in your country, could be the largest energy producer for a very, very long time. And now we're like dialing that back, which I understand. But if you're going to dial it back, you have to have the alternatives to replace them, which we don't. So that's why it's just very interesting what's going on. So
just remember, everybody, when you're paying a lot more for energy or gas or anything like that, just remember that we deserve it and it's worth it to save the planet, Frank.
Yeah, we're all going to die tomorrow.
CNN had a great story. It's comical. But it's our underwater future, what sea level rise will look like around the globe. And what they're talking about, at least these guys are getting halfway smart, because they quit the 10-year and the short timelines because, even though they have no conscience or spine about being wrong, it's okay. Remember, the world was already going to be underwater 10 years ago. AOC is on that same warpath and all that kind of thing. But now they're at least pushing this out to like 2050, 2060, stuff like that, to give them plenty of time. But Frank, they have a couple of these doctored up photos where they show like Buckingham Palace and how, it's going to be not underwater completely, but it's going to be flooded. And they have all these different, big popular areas of the earth, and they're split in half. So it shows it what it's today and how much water it's going to be underneath and all that kind of stuff. It's really comical. But yeah, just remember that, people, when you're paying through the nose for higher energy prices, invest in stocks to make to offset that, make some money, put yourself in a position to gain, and just know, hey, you're saving the world. So give yourself a pat on the back.
And it's great because usually the people who are making that claim, and usually they're in high profile areas because they're on the coastline. There's always limited coastline real estate. Those are the people that are usually buying those houses over there. Even when we're predicting it's going to be underwater, hey, we're going to buy a $9 million mansion pretty close, but you're okay. But everybody else, the environment's going to impact everyone else except for you. But I love it. I love it.